Hey everybody, it's your boy KCG Trades, and today I want to give you guys a quick video on what exactly you want to look for when investing in a stock, okay? So let's just get right into it. I want to clarify that investing is buying and holding stocks for the long term, okay? So we're not worried about intraday movements, we're not worried about checking our daily profits. We are in this strictly for the long term, basically anything over 1 year, okay? We also have to remember that investing and trading are two completely different games. Okay, but the problem is people get confused. They tend to get emotional when they invest in stocks, and that causes them to actually trade stocks when they should only be investing in them, or vice versa by investing in stocks when they should only be trading it. Okay, an example I've given is three stocks. We have Nikola, Kodak, and Amazon. I'm sure if you've been watching the markets the past couple of months, you've definitely heard of Nikola or Kodak, and I'm sure we all know who Amazon is by now. To give you reference, for example, Amazon is a stock that should always be invested in and held through the long term. However, a lot of people that want to invest in it end up trading it to get a quick profit or exit for a small loss. While companies like Nikola or Kodak should only be traded, yet people are holding on to it like they're investing it, which really makes no sense to me because this is the exact reason why a lot of people do not make consistent money in the markets. Okay? Now, both trading and investing are great tools to have to grow long-term wealth. However, in this video, we will specifically look at things to look at before investing in a stock, okay? I like to use the analogy of cooking with investing. Now, with cooking, you need to have certain ingredients before you can make a meal. And just like investing, you need certain criteria to be met before you invest in the stock for the best results, okay? So this is all the prep work you do before actually getting right into it. Now, just a quick understanding. If I'm not mistaken, there are around 3 to 4,000 stocks in the US market, but only 2 to 3% of them are actually investable. Now, this gives us only about 100 to 150 stocks to choose from, which is actually very little, which is why we actually want to pick the right stocks because only a select few out of all the stocks in the markets are actually increasing and giving us more value, while the rest are just losing value or just going sideways, which is definitely not worth our time, okay? Now, in terms of our ingredients, our criteria, I have three main criteria when investing in a stock, and you want our checklist to be met. You want all three to be met before investing in a stock. So the most important thing for a long-term investment is a business that has great fundamentals and consistent growth. All right, this is how the stock price will increase over time. The second is low debt and more cash. So basically, pretty self-explanatory. Um, I'll go into more detail about all three in the next few minutes. But basically, not owing money to anyone or just owing very little, and always having more cash, more assets than liabilities. Basic accounting, right? And third, wide economic moat. You probably have heard of this if you listen to Warren Buffett. He talks about this a lot. He invests only in wide economic moat stocks. And this is basically sustainable competitive advantage that makes it difficult for other businesses to enter. Okay, now I'll just go into more depth now. So as mentioned, the most important aspect of a long-term investment is a company that is growing year over year and has the numbers to back it up. Okay, so what we want to look for is consistent history with growth in net income, sales, and cash. Okay, if it has a strong history of doing so, there's a good chance it could continue to do so. And in regards to sales, this is where the money comes from for any company. A growing company should have sales grow by at least, this is the bare minimum, 10% year over year, okay? And with expenses, a company with large rising expenses will definitely see profits suffer. So this is something we don't want to see, and this is very much a danger sign, so we want to be very wary of this. We want to see companies with lower expenses or expenses that are not going through the roof, okay? And lastly, earnings. This is basically the bottom line. Total earnings should be higher than the year before and consistently growing year after year. And the reason I put an asterisk beside it, if you see it here, is because it has the most impact on a company's stock price. If you've seen recently with stock gap ups in Pinterest, Apple, Facebook, it has gone up over 10% in one day overnight because they released spectacular earnings. All right, so this is something you really want to look out for, as it could give you a great competitive edge over the market. Next, we have low debt and big cash position. All right, so Apple just recently announced they have $193 billion in cash on hand, which is mind-blowing. So it basically means they could sustain anything, okay? They could sustain an economic crash, a pandemic like we're going through right now, and most importantly, they can outlast their competition. So any company with low to no debt and a big cash pile can be sustainable for the long term. Next, we have a wide economic moat. As mentioned, it is a sustainable competitive advantage. So what that means is barriers to entry, high cost to switch. For example, Microsoft Office. Companies with Microsoft Office are not really going to switch because they're very comfortable with it, and they pay costs per year to have it, right? So high cost to switch is a very important aspect in an economic moat, and which is the reason why a lot of companies stay with certain companies because of the high cost to switch over to another company. Next is brand monopoly or oligopoly. So basically, what do you think of when you think of soft drinks? All right, usually mainly, everyone should think of Coke. Some people think of Pepsi if they're weird, but all around the world, Coke is a strongly recognized brand, and they associate soft drinks with Coke. All right, so that's what I mean by brand monopoly or oligopoly. And lastly, no or very little competition is what we want to invest in. Okay. Now, if we find a company that meets these criteria, we definitely have a great company on our hands. But it doesn't mean it's the right time to invest. We do not invest in it just because all these criteria are met. Okay? To get the most value out of our investment, we want to enter at the right time. Okay? Timing is very important in the market, and timing is everything. Whoever says you can't time the market is lying to you because they couldn't do it themselves. Timing is, like I said, it's so important. And you cannot time the exact top or the exact bottom of a stock. That is something you cannot do. No one can. But you can time the market to get the most value for your money and the most out of your investment. Okay. In a future video, I will actually be showing you guys through charts the best time to buy a stock, best time to sell. So please stay tuned for those videos. Okay. And if you stuck with me this far, there is a little bonus here for you guys. All these criteria are very good, but there's also extra things you want to have with a stock. Now, the first thing is no scandals. Companies that are always in the media having scandals aren't good for a long-term investment, because one bad article, one bad press could really affect the stock, and that's something we don't want to be a part of. Okay. Another bonus is investing in a company that you actually understand. This is very important because to hold something through the ups and downs, through the volatility, we want to make sure we understand what the company does and how valuable it is to the world. Once you understand that, you wouldn't even worry about everyday fluctuations. And lastly, a growing dividend if they have one. If a company does have a dividend and it's consistently growing, it shows they are giving back to their shareholders, which is always a good thing. All right, so these 3 bonuses, if you stayed for this video so far, they will definitely help you in investing in a stock. Now, that is basically it for this video. I do want to say thank you guys for listening in. It has been a while since I made a video, but I will certainly continue to get back on this YouTube grind. If you have any suggestions on what I should do for future videos, please comment them down below. And once again, if you like this video, please like, subscribe, share with your friends and family. Thank you very much. Have a wonderful day.